back from the dead. This is coinpicker.us. I have not been a good YouTube uploader, but I'm going to remedy that. I have some big stuff to talk about. We're going to talk about what the Federal Reserve is said they're going to do. We're going to talk about where Bitcoin is, where it's headed, and some big bull markets in Bitcoin that most people are probably not noticing, but very worthwhile to pay attention to. And then just the general, if I can pull it up here, general markets and what's likely to happen in the near term. And we got a massive direction point of data, which pretty much tells us exactly what's going to happen for the foreseeable future and how to make money from it. So stay tuned. Welcome back. Okay, so I'm going to start out with cryptocurrencies because that's where this channel was born, and I'm sure some of you are still interested in what's going on. The current trend has been down for a while. Unfortunately, that trend is relatively strong still, as is indicated by ADX. We are not near a bottom, according to CCI, or I should say a reversal point. And the stochastic RSI is showing an oversold position, but as I've mentioned, and those of you who've been following me for a while, this is the third indicator I pay attention to. It can remain in either the overbought or under or oversold condition for quite a while. Now, fortunately, in the realm of CCI, Bitcoin and many other cryptos don't often go to the extreme underside. So as soon as you get near zero or below, you're poised for reversal in CCI. That only seems to apply to cryptos. It doesn't apply in general stocks and commodity markets. Generally, you want to go below your bottom limits here. Now, ADX is indicating that the downward trend is losing momentum, but not aggressively so. So I don't see on a monthly basis us getting much of a bounce with Bitcoin, and that reflects on all cryptos. We had a little bit of a move up here on the weekly basis, but it has failed and is headed down. So we are getting on a weekly basis, and the trend here is relatively weak on a downward basis. So we are probably getting to a point on a weekly basis where we could see some recapturing of territory. Nothing aggressive, nothing major. It's not tradable in my book. And in fact, we've been in a non-tradable situation, I think, for quite a while, where if you were going to trade it, you were going to have to get in and out very precisely, which is probably not most of my audience. So not even really that toppy on a daily basis. Sort of this is indicating more or less of a trending market. It hasn't moved up much or down. We're not overextended to the upside. We're not, we did come off of a lower position here, but and this is a little bit unusual. You don't often, in crypto, you don't always get below the lower end, the lower bound of CCI, but you did here. And then you had a little bit of a recapture. Nothing to really write home about. 6,000, 6,400. But now the trend is very low on the upside momentum here. So it's just not a market I would trade, because as you can tell, the signals are not strongly definitive one way or the other right now. Not a market I would trade, and that's kind of what I've been telling my subscribers. Now let's go to, where is that bull market in Bitcoin that I was talking about? Well, let me tell you. If you are in the 13th largest economy in the world, NATO member, G20 member, Turkey, the volume in Bitcoin, BTC Turk exchange, has gone up 350%. And the number, what is it? And that's not all, but the significant number of trades, 38%, including Bitcoin. So I've never been to BTC Turk. Let's see if I can get this in English. I've never been there. But the point of it is that, let's see what that price graph, I'll bet you it'd be pretty darn exciting in Turkish lira. The point of this is that Bitcoin is serving precisely the purpose that has been intended since it was originally designed in 2008, 2009. And look at that. I mean, since we have been getting, in the US dollar world, been getting absolutely crushed, Bitcoin in the Turkish lira world has had not quite a doubling, a 50% up move. Is that about right? Yeah, that is almost exactly right. 50% up move. 50%. So 6,000 to 9,000, 7,000, up to 11.5 or 10.5, something like that. Um, a whopper move up. And so Bitcoin is serving the purpose as was intended as the escape hatch from fiat currencies. Now, if you were to price Bitcoin in gold, which is an interesting thing to take a look at, BTC versus gold, and there aren't very many charts that do that, by the way. Da, 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 let's see here. Maybe GM Bullion will do it. GM Bullion's a really good place to buy gold, by the way, FYI. Oh, this is just per ounce gold. Yeah, this isn't showing a graph. It's a beautiful infographic, though. Beautiful infographic. Well, I'll have to show that. I'll have to look for that later. But I would suspect that relatively recently, Bitcoin and gold have been experiencing both significant weakness. And why is that? Well, let's go take a look at, well, actually, before we do that, let's go to the cryptocurrency chart and see if there's anything really hopping in the cryptocurrency world. Kyber Network, very serious project. Chainlink, Tau. Yeah, I mean, these moves I don't consider that important. 20% is an interesting move, and I suspect that revolves around it being listed somewhere or something like that. Not a move that we can jump on and expect to run up considerably. Yeah, this may be it. Liquidity source, Oasis Dex to access liquidity source, that may be it. But it is a serious project. It is a serious project. So, you can potentially look at it as long-term upward trend. It's not on my necessarily recommended list, but in fact, let's take a look at it. Let's take a look at the charts and see if I would consider it. Hasn't performed much different than a lot of the market, although this is a very positive move up in May when a lot of the market wasn't, so that's potentially good, but you've gotten creamed. You lost most of your money there, so this is a relatively small move. I'll have to look at it. I wouldn't say it's anything to get too excited about at this point, but let's take a look further on about one of the main reasons I made this video. So I saw this article, Fed's Kaplan, 3 or 4 more rate hikes. Now, any of you who are on my sign-up sheet with my email list, which is at coinpicker.us, you go here and sign up right there. It's free, and I send it out once every weekish, once every 2-3 weeks, sometimes if nothing really exciting is happening or I don't expect any major change. But I just sent one out a little while ago where I went into some depth of what could be happening with the Federal Reserve and the impact. Because what we're seeing now, and I'm going to show this to you really quickly, what we're seeing is if you go to the US dollar index, which took a bit of a dump today, but generally it's been rising. And I've talked about, let's see here. All right, so if we go to, let's look at 5 years. All right, so within the 5-year envelope, we were up as high as 102. Actually, I think it was 103. This isn't showing it, 103 something. So we're down at 95. But that's recaptured a lot of territory since it was at 88 or 89 ballpark, which is right in January. Now, if you'll notice, and those of you who followed me for a while realize that I talked about this at some length, and I even showed a graph that was next to impossible to find that showed the inverse relationship between Bitcoin and the dollar. Now, Bitcoin has been getting slammed since roughly late December, January. The whole crypto market. And guess what's been happening to the dollar? It's been rising dramatically. Now, it's not a linear relationship. Dollar goes up by 1 point, Bitcoin goes down by, whatever, 10%, 1%. It's quite the opposite. In fact, any small movement in the dollar cuts the legs out, positively, cuts the legs out from under Bitcoin. Same thing works in reverse. When the dollar was up here, and it's not, as I said, it's not linear because Bitcoin and the dollar, they've had a more complicated relationship than a linear relationship. But basically, as the dollar was really on a downward trek, crypto was on a massive upward trek. I mean, a large part of the crypto currency move occurred basically 2016 on. I mean, that was a huge chunk of it. So just keep that in mind. But what we're seeing now is that the dollar is at 95.12, but then we get this interview from the Fed's Dallas Federal president. Now, the Dallas Fed is one of the most influential Federal Reserves. The New York Fed and the Dallas Fed are very, very high up there. Atlanta Fed has its role, but St. Louis Fed, San Francisco Fed, and some of the other ones. But Dallas Fed is very, and Robert Kaplan in particular, very influential. Here's what he's saying. Fed should continue raising interest rates until they hit their neutral level, which he said is about 3 or 4 quarter point rate increases away. So that's 3 or 4 more raising sessions. Now, I am actually against the Fed getting involved in the market in any way, shape, or form. It should be completely free, unfettered, and that would be taking a step away from socialism and communism and Marxism, fascism, all of them, because that's what control of the money supply is. Once you have this private group or even the government controlling the money supply like this, you have fascism. The money supply is supposed to be completely free market. Okay, so that's a dreamland, of course, right now at this point. But the reason I bring it up is that while I am against the Federal Reserve, I am supportive of what he's saying. They're attempting to get to what they consider to be the, quote, free market rate. Now, the free market rate of interest is probably closer to 8%. Nowhere, if you go 3 or 4 quarter point rates, all you've done is bump it up 1%. So if we're at 1.752, we're only at 3. That's well below free market. Now, by the time that 3% gets out into our world, and credit card fees and car loans, etc., that could be 6 or 8 or 10%, whatever it is, because of the scam of the whole financial system. But it's not 3%. Rarely. It's usually much higher. So I'm obviously against the Federal Reserve, but I am in favor of them raising these rates. Now, what will that do, though? That will cut the knees out from under the home market, cut the prices down. It will also eventually cut the legs out from under the stock market, which, while it hasn't happened entirely, let's take a look. And I'm running on a little long here, but let's take a look at what has happened with the indices. Even though they've reached some new highs. Okay, that's actually, I think, a new high. The Dow Jones is not at a new high, and the S&P might be right at a new high, very close. So they're all within a knock of it. I mean, let's take a look at the Nasdaq. Now, the small cap, I think, was definitely at a new high. But the Nasdaq, the small cap was at a low level, relatively low. Let's see here. Yeah. Okay. So it's just shy of a new high. Just shy of a new high. Basically there. I think the Dow Jones is not quite as favorable because it doesn't have all the red hot high flying stocks. Let me just confirm that. Let's take a look. Yeah, actually, it's pretty close. It's pretty close as well. So they're all relatively close to new highs. But this message here, if in fact that's what's going to happen, and it doesn't sound like he's doubtful that it will, meaning it sounds like he is voicing the same path that the head of the Fed, Jerome Powell, is promoting, that's what they're going to do. Now, what could stop this? I mean, Trump has got several Federal Reserve board members, FOMC board members to appoint. Potentially, that could stop or slow this down. But at this point, the numbers from the economy look pretty solid. What this will do, and keep in mind, that's only a year's basically, and it's 3 or 4, so essentially a year's worth of interest rate raising. So what are we at now? We're in August, so we've got one in September, October, November, December, January. So we're first quarter-ish of 2019 before the rate raising cycle is over. So more than likely, more than likely the stock market will be taking a breather with the next point raise. The housing market will be taking a continued breather because that's been going down. And oddly enough, commodities will probably take it in the shorts a little bit. Now we've seen wheat and soybeans. As I have mentioned, um, the softs, meaning wheat, soybeans, maybe cotton, but it's not a food soft, corn, um, a lot of different, pork bellies, cattle, a lot of these, they have a long-term uptrend that there's no way to get around it. No way to get around it. Even the sanctions and things like that will uh, eventually get out of the way, essentially, and force the market higher. But if you look at the price of soybeans, where there's been a huge impact from the tariffs, and you look at what's going on here, and I haven't looked at this chart, we're definitely bouncing off the bottom. This is what is this? Is just a daily chart. Let's see where we're at here. Okay, so we had a big rise here. We're bouncing off the bottom here, and this is the tariff impact. But worldwide, soybeans have been the price has been rising. Now, if you look at wheat, which is less of a less impacted somewhat by the tariffs. Let me just check here. See where wheat is. I know wheat had quite a okay. So we've got much more of an upward trend than soya, but soybeans, all of them are going to be in the same boat. All of them are going to be in the same boat. And so commodities may take a breather from this somewhat, but the soft commodities will take less of a breather. Silver and gold, it's probably going to be until next year before they really get that rocket going. And what will happen the minute the rate raising cycle stops, and that means the stock market will have probably rolled over already, even though the numbers are actually not that bad. The stock market will have probably rolled over. The dollar is probably going to fall very, very hard. Very hard. Why is that? Because if you look at the chart of the dollar index, it has to crest over 103 roughly and hang there for a while before it's beginning a new bull market. This is a bear market bounce. That's what this is. And we're at 95-ish, 95. Has to get over 102. It's actually, I think if we got it more detailed, it would be closer to 103. But it has quite a ways up to go. And I don't know that it's going to quite get there. I think it will fall short. And that will mean that it's going to drop significantly further down, especially with the debt being issued by the United States. And what will that do to our Bitcoin market? It will bounce it back up. What will it do to the commodities? Send them on a moonshot. So when I've talked about in a year we're going to be farther ahead, that's what I'm talking about. So the soft commodities, gold and silver as well, are due for next year a very, very good year. And of course, taking positions now. In terms of the indices, I think they're going to start rolling over. Now, we've had some downward moves, but I think they will start rolling over. And that will be as the home buying drops and as several of the interest rate sensitive markets begin to show the result of the Federal Reserve raising interest rates. Now, this isn't baked in stone. The Federal Reserve could change this out, could basically reverse course if something came through, or if Trump, gets all of his people on board. But I don't see that happening. I see that the Federal Reserve is going to continue to raise interest rates so that the next cycle they can drop them if they have to. 3% doesn't really give you a heck of a lot of room. They should be at 5 or 6%. But then we'd have the home prices would flatten down by 50% overnight, basically, because nobody can really afford their homes at free market rates, unfortunately. So that's the update I wanted to provide. That right now, until this changes, the stock market is more or less on borrowed time, as I've been saying for a while. That long dated short options will be where to go. Long dated short options for most of the stock market. And you could pick any of the FANGs, any of the highest flyers. The Facebook, Google, Netflix, even Apple, any of those. Obviously, Tesla, the shorts have done very well on that. But high flyers, long-dated short options, or you could just do the index if you wanted, because the actual market increase is very narrow. It's only focused on a couple of stocks. It's not the entire index. That's one way to make money. The commodity index, all you can do right now is buy in cheap and then hold on for another year, and you'll see that you begin to make a lot of money pretty quickly when it gets going. The dollar is probably going to be continue rising for a little while, but once that interest rate trend reverses, the Federal Reserve rate trend reverses, dollar's going to fall hard. It might even fall before that when they say we're only going to do one more interest rate rise, because the debt issuance from the United States government is so extreme. The crypto space has a potential for a rebound when the dollar begins to drop significantly, but that could be a while. So right now we're just treading water. The ETFs are not coming in, so we don't have a huge source of new money bidding up Bitcoin or things like that. And that's really one of the issues. That's what we were sort of banking on, the institutional money, and it would have indeed lifted the value significantly. But right now we don't have that. Now I did see a statistic that's saying Coinbase is still receiving 50,000 new signups a day. I don't know whether that's verified. I just did see that. So that's what's going on right now, and hopefully that's been beneficial to you. If you aren't signed up, please do sign up at coinpicker.us. And for those of you that are signed up, I have two things happening. One is I am planning on doing a live stream where the members, can ask me any questions or anything like that. And also I'm updating the subscription section for some specific picks on the options and things like that I'm recommending that I'm actually doing. So this is coinpicker.us signing out.